Welcome to a new episode of Inside the Economist's Mind. Today we're taking a close look at the Australian energy market, specifically focusing on the first quarter of 2025. I've got a really detailed report here. It's packed with information on electricity and gas markets, things like how much power we actually used, what it cost,
Yeah.
where it all came from, and of course the growing role of renewables. So our goal today is really to make sense of all this data, pull out the key shifts, and maybe some surprising bits that you really need to know.
Exactly. Think of this as your shortcut, really, to understanding what's been happening in Australian energy. We're diving into the numbers, looking at in gas, demand, prices, the generation mix, and the impact of renewables, all to give you a clearer picture of those first 3 months of 2025.
Okay, great. So to kick things off then, what were the sort of big picture trends? What really jumped out from this quarter?
Well, what's really interesting, I think, is this kind of dynamic between how much electricity we're actually using underneath it all and the record amount coming from rooftop solar. Across the NEM, the National Electricity Market, that is, the underlying demand. So the total power needed before you factor in rooftop solar actually hit a new high for Q1.
It's okay.
But at the same time, we saw absolutely record-breaking output from all those solar panels on homes and businesses. And that actually offset some of that grid demand.
That sounds like quite a significant push and pull happening there. So even with all that extra solar, did any areas still see their demand really stretched?
Oh, absolutely. Queensland, for instance.
Yeah.
Despite having generally cooler temperatures compared to maybe previous years, it still managed to reach a new all-time peak for electricity demand. Yeah, it really highlights how specific local factors can still drive these big surges in energy use. But then on the flip side, the sheer volume of electricity being fed back from distributed solar meant we hit new record lows for the minimum amount of power the grid actually had to supply at certain times.
Right, okay. Prices are always a central point for people. What did we see happening there in the wholesale electricity market?
Well, the average wholesale price across the mainland NEM actually saw a slight decrease overall.
Oh, okay.
But, and this is important, it wasn't the same story everywhere. Different regions definitely experienced different price movements. There was quite a bit of variation.
Right. And how did the growth of renewable energy factor into all of this pricing?
Yeah, that trend, the increase in renewables in the mix, it definitely continued strongly. You saw wind power, grid-scale solar farms, and battery storage all contributing a larger share. And this growth is also directly linked to the fact that we're seeing lower overall emissions from the electricity sector,
Yeah.
which is a key outcome.
Good point. Okay, turning our attention to gas for a moment. What was the story there?
Gas prices on the East Coast actually reached a new high for the first quarter of the year.
Really? A new high?
Yep, a new Q1 high. And what's notable is that this happened even while the overall demand for gas actually decreased a little bit.
Huh. Okay, let's dig a little deeper into that electricity demand then. You mentioned a record Q1 for underlying demand across the NEM, the total energy users wanted. What was that actual figure, roughly?
Yeah, the average underlying demand across the NEM was pretty substantial, 25,162 megawatts. That's set the new Q1 record. Now, when you factor in the impact of rooftop solar feeding power back, the operational demand, so the grid itself had to supply that average slightly lower at 21,380 megawatts.
Right. And that rooftop solar contribution, it must have been pretty significant to make that kind of difference.
Oh, it was huge. The average output from distributed PV, rooftop solar, reached 3,782 megawatts.
Wow.
That's a 16% increase compared to the same time last year. Another new Q1 record. We saw particularly strong growth in rooftop solar output in Queensland, New South Wales, and South Australia. It really shows you just how much power individual homes and businesses are now generating themselves.
It's amazing how quickly that's shifting things. You mentioned Queensland had that record demand despite cooler temperatures. Any thoughts on what was behind that?
Yeah, it's a bit counterintuitive, isn't it? Despite average temperatures being a bit milder, Queensland still hit that all-time maximum demand of 11,144 megawatts. That was back on January 22nd. That's 139 megawatts higher than their previous peak, which was set last summer. It could be a range of things, really, maybe specific weather events on that particular day, or just underlying changes in how people are using energy.
Interesting. And which part of the country saw the biggest jump in their sort of basic electricity needs, that underlying demand?
Victoria, actually.
Uh-huh.
Victoria experienced the largest increase in underlying demand during the first quarter.
Okay. You also mentioned some record lows for operational demand, the power the grid had to provide. Can you give us some specifics there, dates, numbers?
Sure thing. Across the entire NEM, we saw a new Q1 minimum operational demand of just 11,680 megawatts. That was on February 16th. New South Wales mirrored that with its own Q1 minimum of 2,718 megawatts on the same day, February 16th, which also happens to be their all-time lowest demand ever recorded.
Wow, okay.
And Victoria, they set a new all-time minimum operational demand, not just for Q1, but ever, of only 1,504 megawatts.
Right.
I was right back on New Year's Day.
New Year's Day, right.
Yeah, that really low figure was helped by being a public holiday, mild temperatures, and lots of sunshine boosting that rooftop solar output. A perfect storm for low demand, really.
Okay, let's switch our focus then to those wholesale electricity prices. You said the average across the mainland NEM dipped slightly. What were the sort of things pushing prices up, and what was helping to keep them down?
Right, so on the upward pressure side, we definitely saw increased operational demand in the southern states at Victoria, South Australia, more power needed from the grid there. And we also saw that the prices offered by coal and hydropower generators, when they were the ones setting the market price, those offer prices were higher.
How much higher?
Well, for example, when coal generation was the marginal supplier, its offer price jumped from about $71 to $84 per megawatt hour. And hydro, when it was setting the price, rose from around $85 up to $123 per megawatt hour.
Okay, that's quite a noticeable increase. So what factors help to sort of counteract those rising pressures?
The downward pressure mainly came from two things. One, we just didn't see as many of those really extreme, short-lived price spikes compared to Q1 2024.
Ah, okay.
And two, we had greater availability of renewable energy. Grid-scale solar and wind farms were actually setting the price more often, something like 15% of the time compared to only 10% the year before. And this also led to more frequent and significant periods of negative prices, especially up in Queensland and New South Wales.
Negative prices, right. That's when there's so much supply, usually from renewables, that generators essentially pay to stay online.
Exactly. It happens when there's just so much renewable energy available that generators are willing to pay sometimes just to keep their output flowing rather than shut down.
So renewables are really starting to have a tangible impact on actual price-setting moments. Were there any regions that saw particularly big swings in their average prices?
Tasmania definitely stood out. They experienced the most significant price increase, a pretty substantial 67% jump, actually, to an average of $111 per megawatt hour.
Wow, 67%.
Yeah, and that was largely driven by those higher underlying energy prices we were just talking about. Queensland was the exception, really, the only region that saw a price decrease. Their average price went down by 24% to $90 per megawatt hour. That was helped by those milder weather conditions and fewer of those high price spike events.
It sounds like the way that average price was actually made up also shifted a bit. What was going on with the sort of underlying energy component versus the impact of those really high volatility moments?
Yeah, exactly. The component of the price that comes from those really high, short bursts of volatility, sometimes called the cap return component, that actually decreased across the NEM overall. But at the same time, the more consistent underlying energy prices generally increased, particularly in those southern regions, Vic and SA. And interestingly, the average wholesale spot prices across the NEM saw the biggest increases during the overnight hours.
Overnight. And what about how prices behaved between the different states? Were there any notable differences emerging or changing there?
We did see some interesting shifts. The price difference between Tasmania and the mainland actually widened, particularly during the middle of the day.
Okay, why would that be?
It could be related to the limitations of Basslink, the interconnector cable under Bass Strait, especially when there's a lot of solar power being generated on the mainland midday, can affect that flow. On the mainland itself, the price gap between New South Wales and Victoria actually narrowed a bit, but the difference between Victoria and South Australia grew.
And what do you think was driving those mainland price differences?
Well, that higher operational demand we mentioned in both Victoria and South Australia was a key factor in pushing up their underlying energy prices compared to, say, New South Wales.
Right. And it sounds like those really high price spikes, getting above $100 per megawatt hour, they were also happening more often.
Yes, definitely. The frequency of prices going over $100 per megawatt hour more than doubled. It went from about 15% of the time in Q1 2024 up to 41% in Q1 2025.
41%, that's a big jump.
It is.
What about the other extreme, those periods of negative or zero prices? You mentioned they were more frequent.
Yeah, really significant increase there too. Negative or zero prices occurred in 18% of all dispatch intervals across the NEM.
18%, wow.
Yeah, a substantial jump from before. This was particularly noticeable in Queensland and New South Wales, where these events just became much more common. Although, interestingly, while negative prices were happening more often, the average price during those negative periods actually rose a bit. It went from around minus $49 per megawatt hour to about minus $35.
Huh. Any idea why?
It's thought to be linked to declining prices for large-scale generation certificates, or LGCs. Those are the incentives for renewable energy production, and as their value falls, it slightly changes the economics during those negative price events.
I see. Okay, let's move on to how all this electricity demand was actually being met, the generation side of things. Overall, total generation increased slightly, you said. What drove that?
Yeah, total generation across the NEM was up 2.2%. This was driven mostly by that higher underlying demand we talked about earlier, but also by increased energy use for charging batteries and for pumping water in pumped hydro storage facilities. Both use energy, so they add to the total generation needed.
Right. And did renewable energy continue to expand its role in the electricity we actually use?
Oh, absolutely. Renewables reached a new high for the first quarter, supplying 43% of the total electricity in the NEM.
43%. That's huge for Q1.
It really is. Grid-scale solar farms hit a new all-time high in generation, up 10%. Wind power also had a really strong quarter. Generation was up 18% to a new Q1 record for wind. And battery generation was a real standout. It soared by 86% to a new all-time high. Most of that activity was concentrated in the evening peak, when demand is typically highest, and solar generation has faded away.
So, with this significant growth in renewables, what happened to the more, let's say, traditional sources of power? Coal, gas?
Well, generation from both black and brown coal fell to new Q1 lows.
Okay.
Gas-fired generation also decreased, reaching its lowest level for a first quarter since way back in 2004.
Right, since 2000.
Yeah. Even hydro generation saw a slight overall decrease compared to the previous year. Now, there were some regional variations, of course. For instance, black coal generation in New South Wales decreased quite significantly, partly due to more power plant outages there. In Queensland, black coal generation actually increased during the evening and overnight periods. That was attributed to the return of the Codsey Power Station unit, but it was lower at other times of the day. And brown coal generation, where it's used, was pretty consistently lower throughout the day.
It really sounds like wind and solar were stepping up significantly to fill that gap left by coal and gas.
Exactly. The total generation from large-scale, variable, renewable energy sources, so mainly wind and solar farms, reached an all-time high. Wind contributed the majority of that increase. We're talking average wind generation of about 3,517 megawatts, and grid-scale solar averaging around 2,386 megawatts. However, with this increased output, especially solar during the day and lower daytime demand sometimes, we also saw a pretty significant increase in what's called economic offloading or curtailment of wind and solar.
Right, being asked to reduce output.
Yeah, basically when renewable generators are asked to reduce their output because there's either more supply than demand or because prices go negative, this type of curtailment increased dramatically by 84%.
Okay, so more renewables overall, less reliance on coal. What was the impact on greenhouse gas emissions from the electricity sector?
Yeah, this is a really positive part of the story, both the total emissions from the NEM and the emissions intensity. So the amount of CO2 per unit of electricity reached new Q1 lows.
Great.
Total emissions were down by 5.1% compared to Q1 last year, and the emissions intensity fell by 4.4%. Even the emissions intensity specifically linked to that underlying demand also hit a new Q1 low. It wasn't just the NEM Western Australia's market, the WENF, also saw record Q1 lows for both its total emissions and emissions intensity.
That's really good news. Okay, storage is obviously becoming increasingly vital as we integrate more of these variable renewables. What were the trends we saw with batteries and pumped hydro in Q1?
Well, interestingly, despite that huge jump in battery generation we discussed, the overall net revenue for grid-scale batteries in the NEM actually fell slightly.
Oh, how come?
It seems their revenues specifically from the energy market, so buying low and selling high, increased significantly. That makes sense, with more opportunities to charge during those low or negative price periods and then discharge when prices were higher in the evening. But maybe revenue from other services, like frequency control, didn't keep pace, leading to a slight dip overall. On the other hand, pumped hydro net revenue decreased more noticeably. That was mainly because there was just less of that really high price volatility, especially in Queensland and New South Wales, that pumped hydro typically profits most from.
Right. They thrive on those big price swings. And it certainly feels like we're seeing a lot of new battery storage capacity coming online all the time.
Absolutely. During this first quarter alone, we saw several major new battery systems either start operating fully or begin the commissioning process in the NEM. You're talking significant projects like Western Downs, Warata, Blythe, Rangebank, Greenbank, Tarong, Airing, Karanji. It represents a really substantial increase in our grid-connected battery storage capabilities just in those few months.
Okay. Now, let's circle back quickly to the gas market. You mentioned prices hitting a new Q1 high on the East Coast. What were the main factors driving that?
Yeah, that average wholesale price hit $13.26 per gigajoule, a new Q1 high. This happened even though, as we said, total gas demand saw a slight decrease overall. We saw a drop in demand for gas used in Queensland's LNG export facilities and also less gas used for electricity generation.
Right.
Interestingly, while the Queensland LNG projects reduced the amount of gas they supplied into the domestic market, Victoria's gas supply actually increased, mainly thanks to higher production from the Otway and Longford gas fields down there.
So while domestic gas prices were high, record highs for Q1, were they moving in line with what was happening internationally with LNG?
They were at record Q1 levels domestically, yes, although they did ease back slightly from the very end of 2024. This likely reflects movements in international LNG prices and also thermal coal prices because these global energy markets are all quite interconnected. We actually saw Asian spot LNG prices finish the quarter at their lowest level since October 2024, so some easing there internationally. But on the trading side, domestically, the volume of gas traded on the gas supply hub, which is a key platform, actually set a new Q1 record, so lots of activity.
Okay. And finally, let's just touch on the energy market over in Western Australia, the WE, which operates a bit differently. What were some of the key highlights there in Q1?
All right, the WEM. They saw a slight increase in average operational demand, and they even set a new record for their maximum operational demand back on January 20th. Underlying demand there also reached a new all-time high. So similar demand trends in some ways. Renewables contributed about 12.9% of the electricity supply during peak demand periods, with batteries and wind being the main players there. We also saw batteries and hybrid power plants playing a bigger role in generation, displacing some coal generation, similar to the East Coast.
And emissions.
Yep, same story. Western Australia also experienced a record Q1 low for its emissions intensity. And for the first time ever in a first quarter, batteries participated in their frequency control markets, FCAS, gaining a significant share quite quickly. However, they did see a significant increase in costs associated with network control services and CESS, mainly due to some new contracts coming into effect.
Okay. It certainly sounds like it was a quarter of, well, significant shifts and ongoing evolution right across the Australian energy landscape. Were there any notable changes in regulations or market rules that were actually implemented during this period?
Yes, there were a few key market reforms delivered in Q1 2025 in both gas and electricity. For example, we saw the integration of renewable gas, like biomethane, into AEMO's facilitated gas markets. That's a step towards incorporating lower emissions gases into the existing system. And over in WA, changes were made to their reserve capacity mechanism, the RCM, to allow more flexible power sources like batteries to get certified more easily, and also to allow demand response programs to participate more readily.
Okay. And anything major coming up?
Yeah, looking ahead, there are further reforms planned for Q2 and Q3 this year. There's a broader review of that reserve capacity mechanism happening in WA, and also a review of metering services planned for the NEM. So things keep evolving.
Right. So to try and summarize then, it seems the first quarter of 2025 really highlighted this dynamic interplay, didn't it? Increasing renewable energy coming into the system,
Yep.
some demand patterns still being heavily influenced by weather and maybe other factors we don't fully understand yet. And the market mechanisms themselves continuing to adapt, sometimes smoothly, sometimes maybe with bumps, to these changes. We saw record levels of renewables contributing and some really interesting new price behaviors emerging as a result.
Absolutely. I think the continued growth of renewables, and particularly the increasing role of energy storage, batteries especially, are clearly the fundamental forces reshaping the Australian energy market right now.
So here's maybe a final thought for you, the listener, to consider. With this increasing amount of renewable energy, all this wind and solar, and the growing use of battery storage, what do you think will be the next major turning point in the Australian energy market? And maybe more importantly, how might that ultimately impact your own energy use and, of course, your energy costs down the track? It's definitely something to keep in mind as this absolutely crucial sector continues its rapid transformation. Thanks for joining us for this deep dive.